Alright, hi, this is Dylan. Welcome to my daily trading analysis video. Today is a Thursday, 11th of June. So we're gonna start off with, as usual, the euro against US dollar. So this is the 4-hourly chart. As you can see, the price was still kind of little change as it got resisted at the resistance level of 1.1348. Fibonacci expansion 141.4%. But however, based on the structure itself, we're actually expecting price to gain further, mostly based on the structure right here. We can see that there's actually a kind of like a inverse head and shoulder formation. We're expecting price to really appreciate much further from here, at least till it touches the next resistance level at the price of 1.1427. Fibonacci expansion 161.8%. So into the smaller time frame itself, we are waiting for retracements to go for a long opportunity. So right here, we are seeing that in the 1-hourly chart, price is breaking below the both 55 and 20 moving average. So we'll wait for price to retrace a little bit closer to the 200 moving average as the next support level to go for a long. Alright, so that is actually pretty much for the euro against US dollar, pretty straightforward. So that's for the euro against US dollar. Next, we have the New Zealand dollar against the US dollar. This morning itself at 5 a.m. plus 8 GMT, the Reserve Bank of New Zealand unexpectedly cut their interest rates by 0.25% down to 3.25%, where the market actually overreacted, and price has slumped to the support level at the price of 0.7,000. Sentimental price itself, which is also at the Fibonacci expansion level 161.8%. So right here we actually expecting price to rebound as it got supported at 0.7,000 sentimental price, and of course Fibonacci expansion 161.8%, as I have just mentioned. So this could be a good chance to go for a long, but however we are expecting price to eventually fall further. As you can also see that in the 4-hourly chart, price actually fell from the top of a falling trend channel. Alright, so just either you can go for intraday long right here, or you might want to wait for a further retracement to go for a short instead. We are also expecting that the Reserve Bank of New Zealand might cut interest rate further. Alright, so that's for New Zealand dollar against US dollar. Next, we have the pound against the US dollar. Price has was still kind of little change as it appreciated and starts to fall again. If we look at the whole chart pattern itself, we're actually seeing a head and shoulder that's forming right here, but expecting price to appreciate a little bit further before it completes the second shoulder of this formation itself. But do note that this is not a very ideal one to begin with. So right now just expecting price to retrace a little bit further. Now in the 1-hourly chart itself, it's about to hit the 55 moving average. So that will be the first level we'll be looking at as a support level to go for a long. If not, the 200 moving average will be the next support level. And of course we are expecting price to appreciate all the way to somewhere at the price of 1.5630. That could be the good price to go for the short instead. Alright, we want to use a Fibonacci retracement. Currently price is very close to 61.8% retracement level, but it wouldn't be a surprise if price were to kind of spike a little bit higher before it begins to fall. Of course, do take note that the stochastic is already at overbought zone. We have a magic candle right here with confirmation. Price may just continues to fall further from here, so you might just want to take note of that as well. Alright, so that's pretty much for the pound against US dollar. Next, we have the Aussie against US dollar, which have appreciated. This is the 4-hourly chart. Price appreciated again on the good employment data, and the unemployment rates unexpectedly fell by 0.2%. So a improvement in the labor markets could have prompted for a pickup in the domestic growth, where the Reserve Bank of Australia is trying to make a transition from the one money investment to a domestic growth, so as to pick up inflation in a way. So with the data right now, we are expecting price to gain further, although we are seeing the price is being resisted persistently at the 200 moving average. But I'm expecting the price may just break above the 200 moving average very soon enough. Alright, and of course, based on the chart pattern itself, we have the double bottom, so therefore we are also expecting price to gain further from here. Of course, the first key resistance level will be at the price of 0.7929. Eventually, we can actually use Fibonacci expansion to measure where is the final exhaustion level before we eventually look for a short opportunity. Alright, so now back to the smaller time frame, just waiting for price to retrace a little bit. Probably at the 55 moving average will be a good price to go for the long. Alright, so that is for the Aussie against US dollar. Next, we have the dollar against the Japanese yen. The yen unexpectedly gained as well on the comments by the Bank of Japan, Gulf Kuroda, saying that further weakening of the yen is unlikely, but however, this is probably going to be very, very short-lived, as the Bank of Japan continues to expand its money supply in order to boost inflation from a 0% growth. So right now we are expecting price to appreciate further. So zooming the smaller time frame based on the 1-hourly charts, we are actually looking for some forms of a chart pattern that will shows that price will appreciate further. Right now, well, we are actually expecting price to like retrace a little bit. Probably we can use this trend line as a support level if it happens to retrace later on to go for a long instead. And that's for the dollar against Japanese yen. Next, we have the dollar against the Swiss franc. Right, so back to the 4-hourly chart itself, we have seen the price has gained as a rebuttal off from the retracement level of 61.8% after a failed attempt to break lower. And right now, we are seeing the price may continue to appreciate as it appreciate within a probable rising trend channel. So of course, we also seen the price has been continuously being supported at the top of a previously broken falling trend channel itself as well. And if you zoom the smaller time frame, the 1-hourly chart right here, if you look at this formation, it is pretty much of a inverse head and shoulder. So this itself could also prompt the price may appreciate further significantly. From here, so the first level we might be looking at somewhere the price of 0.9428 based on this formation itself. Based on the 4-hourly chart, if we are expecting a rising trend channel, then we are really expecting the appreciation to be much more significant in the way. Alright, so that's for the dollar against the Swiss franc. The last but not least, I would just like to touch on the Aussie against New Zealand dollar. So we have a kind of a divergence right now. Not really divergence, but rather the sentiment right now is that the Australian dollar may appreciate further as we are seeing an improvement in the labor market, which, as I have said, prompted to have to have a pickup in the domestic growth itself, while the Reserve Bank of New Zealand may continue to cut interest rate further. So we are expecting price to appreciate further from here for the Aussie against New Zealand dollar. And if we look at the day 1 chart itself, this is a very huge inverse head and shoulder formation, and therefore we are expecting price to appreciate much more further from here, expecting price to reach the previous high at the price of 1.1293. Alright, so that is for the Aussie against New Zealand dollar. And last but not least, just take note that later on at 8:30 p.m. plus GMT, we have the retail sales and the core retail sales for the US dollar itself, and this could and I'm expecting a huge impact from this data itself, especially right after the employment data from last week, Friday. This data will impact the decision of the Federal Reserve to raise interest rate earlier or not significantly as well. So just take note of this news later on. And with that, I've come to the end of my trading analysis video for today. So thank you for watching, and I'll see you again.